Welcome to the Lend Academy podcast, episode number 137. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lend It. Today's episode is sponsored by Lend It USA 2018, the world's leading event in financial services innovation. It's going to be happening April 9th through 11th, 2018 at Moscone West in San Francisco. We're going to be covering blockchain, digital banking, and of course, online lending, as well as other areas of fintech. There'll be over 5,000 attendees, over 250 sponsors, and registration is now open. Just go to lendit.com/USA to register. Today on the show, I'm delighted to welcome Matt Hollender. He is the director of NetCredit, which is part of Enova International. Now, Enova are a publicly traded short-term lender that many of us know. But NetCredit is their near-prime offering. And I wanted to get Matt on the show. Just NetCredit is, they're doing some good things. They've got some decent scale. And I wanted to get Matt on just to talk about how they do things there, how they do things that are different. I mean, they've got a very interesting, bank partnership model where they use a bank for many states where they operate. And they have obviously a highly automated approach, but they also believe in not doing it being 100% automated. So that's an interesting discussion. We talk about how they fund their loans, how they attract borrowers, the channels they use, and what the future holds for NetCredit. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Matt.
Thanks, Peter. Appreciate you having me.
Okay, I'd like to get these things started by giving the listeners a little bit of background about yourself and what you've done in your career up to this point.
Sure, absolutely. So first, my education is not in finance, it's in engineering. So I studied industrial engineering, but what I found in my career is that there's a lot of parallels, and I've been able to leverage that education a lot in terms of analytics and a focus on data-driven decisions. So my first job out of college was with Capital One, and I was working on product strategy in their card division, specifically direct mail. So what I did there is I worked on developing rewards programs, doing customer segmentation, and really understanding what customers were looking for in a credit card product. From there, I went to business school, and after that, I joined Enova. And what was really appealing to me about Enova as an organization overall was, the fact that they were cutting edge in terms of technology and analytics. They operate an online model. They were in financial services, which kind of allowed me to leverage my background from Capital One, and it really played into my strengths as well as my interest in business, and more specifically the online model of service delivery. So my first role at Enova was part of the UK business. So in that capacity, I ran the strategy and products teams and ultimately led the business through the process of conforming to the new rules issued as the UK transitioned from the Office of Fair Trading, the OFT, to the Financial Conduct Authority. So that work was, really challenging and rewarding in that we were able to meet all the new rules that the FCA put out, but also to continue to bring our great products and services to the customers who need them in the UK. So once the UK business was fully authorized, I was given an opportunity within Enova to take over as head of the NetCredit business. So the opportunity was exciting because NetCredit focuses on a different segment of customers in a different market, which presents entirely different challenges. So in NetCredit, we are focused on a near-prime customer, which is different than the UK, which is focused on a subprime customer. And then the challenges are a bit different in that the near-prime customer is someone who, is in transition. They may have had, pretty poor credit performance in the past, but now they're showing improvement. Or they might be customers that aren't scored at all. And so it was really a compelling opportunity for me.
Okay, so let's just step back. Before we get into NetCredit, I'd like to just get a little bit of background about Enova. I know it's a public company. It operates globally. And can you just tell us a little bit about Enova, the company?
Sure. So Enova was started in 2004 with a single pay product in the U.S. Enova was really at the lead in terms of what we now call fintech. So it was in fintech before fintech was really a word that we were using to talk about businesses like Innova. And so our advantage has always been using our technology and analytics to deliver best-in-class products to serve customers that others, simply can't or won't. So that was 2004. Since 2004, a lot has changed. The one thing that hasn't is our mission. And so our mission here is to provide hardworking people with access to fast and trustworthy credit. But what has changed is that, as you mentioned, Peter, that we're now a publicly traded company. And, in that intervening time, we've lent and we've served 5 million customers over $20 billion in credit. We've also accumulated over 16 terabytes in data that we can leverage to continue to serve customers in need of the types of products that we offer. So in addition to the U.S. products, we now not only operate in the U.S., but as I mentioned before, we're in the U.K. and more recently Brazil. Across those geographies, we've got a number of different product types. So we've got installment, line of credit, single pay products, and we've also got products which are geared more towards small businesses. And then lastly, we've got a more recent business that we've launched called Innova Decisions. And the purpose of that business is to really allow us to deliver our expertise in technology and analytics to companies that are outside of our kind of traditional industry.
Okay. So let's get back to NetCredit, and then so NetCredit, obviously Innova, you talked about the subprime, and NetCredit is more of near prime, or you can tell me exactly where it fits. But what was the sort of story behind NetCredit, and where does it fit today in the overall company's picture?
Yeah, so NetCredit was started in 2012, and kind of the impetus behind the launch was that we realized there was an opportunity to help customers who are closer to prime, but still didn't have the access to credit they need to manage their finances responsibly. So if you think about typical credit offerings being a ladder, I think we're all very familiar with subprime, and there's a number of product categories to support customers and consumers in that space. There's auto, there's credit cards, there's personal loans, among others, all geared towards the subprime consumer. At the top of the ladder, we've got prime, and prime is really saturated with almost anything you could imagine to serve any sort of need for that prime consumer. So if I think about near prime, it's really kind of the proverbial missing rung in that ladder, in that these are folks that may have previously had prime credit, but they've had challenges. These could be people that aren't yet scored by traditional bureaus, so they don't have a FICO or a Vantage score. And it could also be someone that has been more of your traditional subprime customer that has more recently shown an ability and a willingness to handle their credit obligations more responsibly. So, really the goal of NetCredit and, the way we think about the near prime consumer is that middle rung of the ladder.
Right. Got it. Okay. So then what is your role exactly? I mean, on your LinkedIn profile, it says Director of NetCredit, but what does that actually mean, and what is your role?
Yeah, so my role is the head of the NetCredit business. So in this capacity, I'm responsible for setting the business and the product strategy for NetCredit, as well as leading the efforts required to deliver against our financial plans. So in practice, what that means is that I leverage the amazing people that Innova has across a wide variety of disciplines to deliver the promise of NetCredit. So we've got some people that are focused on technology and analytics, and we've got some people that are focused on finance, but the positive results that we're getting are really a result of collaboration and innovation and execution across all these teams on a daily basis. So, I'm just kind of the ringleader of a talented group of individuals to deliver NetCredit for Innova.
Right. Okay. And so then can you give us a sense of the range of the terms of these loans? Obviously, these are not single pay loans. I see on your website it goes up to $10,000. But so can you, what's the duration of these loans? What are the typical APRs?
Sure. So before I get into the kind of the raw numbers behind the loans, our typical customer, again, is a hardworking American who's working on improving their ability and willingness to repay. And so to generate our loan offers, our goal is to use a wide array and diverse set of data to make a fair and responsible lending decision that reflects the customer's kind of current reality versus where they've been. So we want to look at them today and not yesterday, right? So That's how we kind of think about the near prime as I discussed before. So, what's important to our customers is that, they want flexibility and they want limited fees. So when we're presenting an offer to a customer, we're always giving them the ability to customize that offer to them. So we're going to present them with a range of offers, that we deem appropriate in terms of the amount that they can borrow as well as the length that they can borrow it for. And then they're able to choose the combination of terms that's right for them. So that said, NetCredit offers loans that are between $1,000 and $10,000. We have terms between 12 months and 5 years. Mm-hmm. And our price points range between sub-36 bank loans all the way up to 150% loans. So I think, when you think about that range, it's important to thinking about, again, the journey, right? And we've talked about how a near prime customer is someone that could have previously been prime, they could be unscored, or they could be subprime. So by trying to create a picture of where this customer is in their individual journey and think about where they are today, maybe they've demonstrated a more positive or an increased willingness and ability to pay for a longer period of time, in which case we hopefully will be able to price them at the lower end of that price. And if this is someone that has had more recent challenges in their credit history, then we'll be able to price them at a higher price. But that range of prices really allows us to serve a broader range of customers with access to fair credit products.
Mm-hmm. And so then these customers, you've talked about sort of, they are people that have maybe had some challenges in the past and are getting back out of it, or they're unscored or whatever. But I know like FICO score is not a perfect, it's obviously not a perfect metric, but it's one that we use to kind of visualize where a customer sits, where a company sits and what they're focused on. So is your typical customer in like the 550 to 650, or can you give us some kind of sense of where these customers fit on the curve?
Yeah, so the vast majority of our customers are non-prime, right? So prime is typically considered to be that 700 FICO range, and we know that more than half of Americans fall below. So our customers are comfortably in that non-prime range. I would say that we don't have necessarily limits on who we'll serve relative to their FICO score, because again, our model is really predicated on our ability to individually score these customers and differentiate, our view on their riskiness as someone to take on credit versus the traditional metrics. Mm-hmm. So we believe that our scoring capabilities, and we demonstrate this internally, that they outperform FICO for the customers that we serve.
Right. So let's just talk about that then a little bit. How are you scoring these customers, or how are you making credit decisions? And obviously you're obviously rejecting some and you're pricing others. What kind of data are you using? So
we use all kinds of data. So NetCredit's been around for 5 years, and Nova's been around for 13 years, and it's substantially all of our experiences in serving these non-prime consumers. So we've got a ton of experience here, and we've got a ton of accumulated data internally. So we leverage our internal data as well as external data, and we're constantly evolving how we think about that data and how it plays into a decision. So during an application process, a customer will be filling out their application. Every step of the way, we're updating our view on this customer and their creditworthiness. And ultimately, our decision is tailored to, the combination of all of the facts that we gather during that time. And, by the time they complete that application, which could be a few minutes, we're able to make a provisional offer based on what we know at that time.
Okay. So then how do you get to these people? How do you find your typical customer?
So, as I mentioned before, Peter, we've got a 100% online model. So we're acquiring customers through, almost any digital channel that you could imagine. But where we're really putting our effort in terms of, focus is making sure that our customers can find us when they need us. So since one of our goals and something that we're successful at is to help our customers graduate to prime products, we're always looking for new customers as we successfully move these people forward in their credit journey. Okay,
so then, but you don't offer a prime product inside the Innova family, is that correct?
We don't.
Yeah. Once you've graduated them, you've moved them outside of your organization.
Correct.
Okay. So then, I'm curious about how does that graduation process work? Like someone comes in and they might get, a $3,000 loan and it's, 50% interest rate. They pay that back. Are they then the next time they go for a loan, are they going to become suddenly outside of your credit box? I mean, how does the graduation? Well, I guess what I'm really trying to get at is how are you improving the financial lives of your customers?
Sure, Peter. That's actually a great question. So, as I mentioned before, when we're underwriting a customer, right at the beginning of their journey, we're trying to get a picture of where they're at today, so we can make a responsible and fair decision for them. But the goal is to help them move forward. I think the most important thing that we do for our customers is that we report to the credit bureaus. So every payment that this customer is making is establishing a positive credit history. And so, we live in a great country where there's tons of competition in the financial services space, and we've got banks and other credit providers scouring the bureaus on a monthly basis to find customers and targets that they can market to. So we're really counting on the robust financial services marketplace that exists in our country to give these customers access to kind of that next step of credit as other providers deem it appropriate.
Mm-hmm. Okay. Then, so are you operating in every state, or what states? How many states are you operating in?
So NetCredit products are currently offered in 30 states. I think something that's interesting is that while NetCredit products are offered in 30 states, that's different than NetCredit lending in 30 states. So in 14 states, NetCredit operates as a direct lender. In these states, we are licensed and regulated by the individual state. And in the other 16 states, NetCredit products are offered by our bank partner. So our bank partner has, leveraged our experience in technology and servicing capabilities and the online model that we've become experts at over the last 13 years to offer their products to consumers in ways that they don't have the internal capabilities to do.
Okay, so that's interesting. So basically, when you go to your website, if you're in a state that operates under this banking model, is it a net credit process and the bank is really just making the loan, or is it a co-branded process? How does it work?
So if you're a customer applying for a loan in a state where the loans are offered by our banking partner, you are applying for that loan directly with the bank, and you are running through an application process which is just dictated by them. So, the bank is driving the bus and making all the decisions and setting the criteria for those loans, and they leverage our technology, our online platform, and some of our analytics skills to do that. But ultimately, the customer is interacting directly with the bank. Now, it's offered under the NetCredit brand, and it is, the products are fairly consistent between bank states and non-bank states, and the process to the customer is fairly seamless, but it is a process which is driven by the bank.
So why have you done that? And obviously there are some states where it's easier to operate than others as far as licensing goes, but what's the thinking behind having these two kind of models?
So really it's all about access, Peter. So in the states where we're able to operate as a direct lender, we do so. And really it's a win-win for us in the bank, because these are customers that the bank would love to serve, right? But they don't have historically have not invested in the technology and capabilities necessary to reach these customers. And so, by leveraging our platform and our experience, it allows them into these states as well. So it expands NetCredit's reach and allows us to reach more customers as a brand, but it also gives banks and the banking sector an opportunity to kind of move forward in terms of technology and capability and reach. Right.
So as you expand beyond 30 states, are you going to expand both of these programs?
Yeah, so we're always looking for opportunities to expand our product offering, and certainly in terms of the bank program, our partner has a lot to say in that. Right.
Okay. So I want to talk a bit about technology, because you've said it several times so far that you're operating online. I'd like to get some sense of how automated the processes are, how long it takes for someone to get approved, and maybe you could just talk us through that what happens once once the borrower's filled in their information and they've clicked apply for a loan?
Sure. So I think the first thing I would point out is there's a couple steps in this process. So in the first step, I'd say that 100% of our underwriting is automated and rules-based. It's incredibly important that all applicants are considered on equal grounds, and so we don't have anyone that's looking at these applications and assessing their creditworthiness based on discretion. Everything is based on a predetermined set of rules and is a discrete decision that's kind of pre-made, if you will. As far as automation goes, because we've kind of said now that we've got 100% automation, I think that we're kind of differentiated by the fact that at the end of the day, we are not actually 100% automated in terms of the process. So some lenders will talk about, and I'm sure you heard this before during these interviews, is that 100% of their decisioning is automated and the customer can get this loan without ever interacting with the lender one-on-one. And so I don't necessarily believe that that's the right approach. I think that there's a balance that can be struck between automation and human intervention. And in fact, I believe that we can serve more people by having a strong contact center and loan processing specialists on staff to help customers through the application than we could if the process was truly 100% automated. When we start an application with a customer, we're hoping that the data is available for us to make all of the decisions and the verifications that we need in an automated way. However, that's not the case for 100% of people. So by having these humans and these people in our loan processing department working on applications where this data is not available, we can partner with the customer to get the information from them to allow us to make the right decision for them.
Okay, so then are you going, like, what percentage are you doing it in a completely automated way? And then so that's one question. The second part to the question is, are you then taking a proactive approach in all the ones that are not fully automated? You then reach out to the customer in a phone call or an email, or how does it work?
Yeah, so most of our applications get through the process with limited human touch. And then in the instance where we require some additional documents to verify income or identity or something like that, we've got people staffed in the contact center that are reaching out via telephone and email to kind of talk with the customer and let them know the options that they have to keep their application moving forward.
Okay, so then if someone's, it's just curious to me that, someone's doing a $2,000 loan, for example. I mean, there's not a whole lot of margin in there, I imagine, for you to spend, an hour on the phone with these people to really help them through. Maybe you can answer my question, I guess, but is it for the larger loans that you're doing more of this sort of hand-holding through the process, or is it across the board?
Yeah, so Peter, I think that's a great question, and what it boils down to, I think, is our mission, which is to provide access to credit. So we don't look at an application and say, this is a larger dollar loan, this is a longer term loan. We've got an opportunity to make more money here. Really, we look at these applications as equal, and behind each application is a person that is in a situation that can be greatly helped with access to credit. And so our focus is on helping each customer as an individual get through the process and be there to answer those questions and be a partner with them, because ultimately we want to be a partner in their journey towards prime, and that doesn't matter if they're going to be the biggest loan or the smallest loan. We're going to give the same kind of customer service and customer experience to each one of our customers. Right.
Okay. And so then how would you say, the near prime space is somewhat competitive. It may not be as competitive as the prime space, I'll give you that, but there's certainly others that are in this market. I mean, I had Ken Reese from Elevate on not that long ago, and I know there are others as well. How do you differentiate between your company and your competitors in this space?
That's a great question. So I think the biggest differentiator is our experience. So as I mentioned before, NetCredit's been in operation for about 6 years, but Nova overall has been in operation for over 13 years. So, as an organization, we've successfully moved through several economic cycles, and we've got a full suite of products to serve customers through their subprime and near prime journey. And with NetCredit, I think the differentiator is we've got a fully customizable product, It meets the needs and expectations of our customers. We're licensed in the states that we operate in. We provide a range of products from a bank-issued installment all the way up to a 150% APR loan. And, our focus is on being able to work with people no matter where they are in their journey towards prime.
Okay. And then I just want to talk about the funding of your loans. I presume you're a balance sheet lender, right? You're not operating a marketplace. This is coming. All these loans are coming off your own balance sheet. Is that correct?
So it's a good question. So historically, Innova's products have been short term and they've generated significant operating cash flow. And so, for the main part of the last 13 years, this has been how we've funded our originations. But as we've diversified our businesses and we moved into longer products, right? So when we're talking about NetCredit, we're talking about products which span from 1 year to 5 years. The way that you fund these loans changes and the capital needs change. So what that means is that we've had to think through how to best fund these loans. And so many of our business units continue to generate significant operating cash flow, and that can be used to fund growth. But to further support our business strategies such as NetCredit, which have longer term, higher dollars, we've also developed access to cost-effective funding. So that includes securitization, senior term debt, as well as bank revolver markets.
Right. Okay. Can you give us a sense of the scale you guys are at today? Like what sort of loan volume have you done?
So this is actually an exciting time to ask that question for us. We just hit $1 billion in originations for NetCredit. And it's a milestone that we're all really proud of. So when we talked about the typical term of a NetCredit loan, being between $1,000 and $10,000, when you get to $1 billion, you can really think about the number of loans that we've made and the number of people that we've helped with our products and the amount of access that we provide to credit. So I think, in terms of scale, getting to that $1 billion mark was a big win. And I think, the biggest win, though, is really the number of customers that we've been able to serve.
Sure. We're almost out of time. There's one thing I'm curious about. You've got on your website here, you've got this thing called the My Right Fit tool. Can you explain what that is?
Sure. So I've touched on this indirectly a little bit before when we were talking about the application process, but the My Right Fit tool is part of every customer's loan application. So once we've determined that, they're eligible for a loan, we're going to show them the My Right Fit tool. And within that, the parameters of the loan offer will be loaded. So what term they're eligible for and what loan amount they're eligible for and any combination thereof. And then the customer can fiddle around with this as much as they want and change it from a 1-year loan to an 18-month loan, $1,000, $1,500. And then they can see what impact that has on the amount that they're going to be repaying on a periodic basis, the total cost of credit on the loan. And again, it gets back to what we're trying to do, which is deliver the flexible loan and the right loan for that individual customer.
So are you finding most of your customers coming to you on mobile, or is it still a desktop-centric? Or what's the breakdown?
So, well over half of our customers are coming to us on mobile. So mobile is a huge part of our strategy, and we invest a lot of energy into ensuring that the experience that the customer has, whether they come to us with a 15-inch screen or a 5-inch screen, is going to be consistent, and that they will have a clear understanding of the process and the questions they're being asked and the offers that they're being presented with. And I think also important to mobile is, one, being where customers are, and walking around the block in downtown Chicago at lunchtime, people are on their phones. That's where people are. But two, it's also an expectation. So people expect to be able to log into their account through their mobile phone, make a payment, ask questions, see their balance, whatever it is. So really, we're just delivering what the customers expect at this point.
Right. Okay, so last question before I let you go. What does the future hold for NetCredit? Where are you taking this?
So I think we're just going to continue to try to innovate on our current product set and continue to reach more customers. So I talked a little bit about the milestone that we just reached with $1 billion and how important that was to us in our mission of providing access to credit to underserved customers. And, really the focus is on how do we move the business forward and hit more of those milestones and provide more access to credit for more hardworking Americans.
Okay. Well, good luck with that. On that note, we'll have to leave it there. I really appreciate you coming on the show today, Matt.
No, thanks for having me, Peter. It was a lot of fun.
Okay. See ya.
Bye-bye.
Before this interview, I was doing some research on NetCredit. When I asked Matt about how much of their underwriting is automated, I expected the answer that 100% is automated. So it's interesting to me that they have taken an approach, despite all the masses of data that they have and all the history. I mean, obviously they've done over $1 billion themselves, but they've got all the history of Innova behind them and all the rich data. And he talked about, was it 15 terabytes of data they have. It's interesting that they still find that human interaction important. And obviously they've decided that it is worth the additional cost to have that contact with the borrowers. Very interesting approach, and I'm sure it's one that they continue to refine. But you can see when you're talking about the importance they place on that sort of the customer-centric approach and doing things in a way that is serving the borrower. And, obviously some of that involves, holding their hand through this process. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lend It USA 2018, the world's leading event in financial services innovation. It's happening April 9 through 11, 2018 at Moscone West in San Francisco. It's going to be the largest ever fintech event held in the Bay Area, with over 5,000 attendees expected. We'll be covering online lending, blockchain, digital banking, and much more. You can find out more by going to lendit.com/USA.